Welcome back, ladies and gentlemen, for another YouTube video. I am All in Crypto, and today we're going to be talking about the stock market. We are going to be looking at the possibility of a melt-up like David Hunter is projecting for the stock market. Now, those of you that follow me daily will know that we incorporate the stock market and other markets into our daily cryptocurrency market updates, as I think to look and cross-reference markets and to cross-analyze spot couplings when they are present will give you far more insight into the markets generally than just looking at crypto charts specifically. Certainly if you're trying to get a good gauge of the macroeconomic environment. And we assessed going into January 2023 that the market that we were in 2022 was changing and we were late in that trend. This is why we took positions back on the long side of things after being bearish for 2022 into the markets again. Ultimately, we think we're actually a little bit late for the stock market that had really been rallying since November, but it was one of the factors that actually led us into saying, okay, January, we think that the bottom is in for the majority of cryptos. And since then, Bitcoin is still up 60%. We know the story with altcoins and everything happening with the SEC. But fundamentally, we ultimately think there is a change in the sort of macro landscape, which may sound impossible to many of you who are looking at the kind of headlines and the doom and gloom stats. However, I do think that for me, it's a lot more probable that we see new all-time highs for the stock market. We see a gold do very well and we see crypto do very well. Then we now enter a kind of, this is 2008 and that drop is upon us. So we're going to be exploring all of that. We're going to be looking at some predictions made by David Hunter, like a $6,000 to $7,000 S&P, a $20,000 NASDAQ, potentially propelled by AI, which could be the narrative technically that sort of shows up with it. We've got gold at 3,000 and we've got silver at $6. And he's predicting this by Q4. So I'm not quite sure about his timing. It's not really something that we're massively interested in, is the timing. However, we do think he's largely right in regards to the direction and new all-time highs coming for the stock market, the S&P, the NASDAQ. We have used Microsoft as a kind of poster child, if you will, for the stock market and what it's going to do, for Bitcoin and what it's going to do as we see the NASDAQ at new all-time highs. I think there's a lot of people still bearish on the crypto space that haven't looked further afield. And this all kind of comes in together when we're analyzing a market, is looking at cross markets, looking at markets divided by markets and seeing where there's relative strength and weakness. And ultimately, you know, we very much assess there's been a fundamental change to all markets, essentially, from November going into this year. And we think that there's a bullish period ahead. And we're going to look at some interesting technical features in this video, like rates, for example, and the environment that a pause in rates typically cause for the stock market. And also technically the structure that we have that could see. We don't have technical targets for David Hunter's predictions, but we do have technical targets for upside. So I don't know if it's going to get to 6,000, 7,000. I'm not saying it is, but I can actually see certainly new all-time highs being put in. I think that from a rates point of view, looking at rates and how they affect the markets, using the Fed as an example with the S&P, of course, and then also looking technically at actually you've got technical target that support this across the board. You know, if it walks like a duck and quacks like a duck, and you've got multiple things all suggesting the same thing, including a kind of environmentary factor like rates, then I think it's to be taken seriously. And of course, we can cross-analyze this with a cryptocurrency market and essentially say that we've seen the correlation here. There's a good chance, there's internal reasons for the cryptocurrency market as well. We also have structure for the cryptocurrency market to the upside, but there's a good chance if your other markets are doing this, what's crypto going to be doing? Well, we think it's going to largely be following suit. Very interesting, the lawsuits have recently came about, and you've got Wall Street essentially looking to capitalize it off already. Let's get into it, guys. I don't want to ramble on for too much longer. What we're going to do first is look at the stock market. So this is David Hunter, somebody that we largely disagreed with in 2022. And we were out the market in 2022, essentially, and only got back in at the start of the year. Whether that's going to be the right decision or not, it is still to be seen. You know, we're investment long from really January the 5th. David's essentially calling for, again, a 6,000 to 7,000 S&P price, which is way higher than it is, and we'll look at that. A 20,000 NASDAQ price. Sorry, this is the 100 index. and gold to 3K. And we're going to look at this and see if there's any merit, because I think there is. So let's start off with the S&P, which David has called for to go to 6 to 7,000. I'm not sure it's going to get there, but we do have targets to the upside that see it get to certainly all-time highs and, you know, in the 5,000 range. Markets are really driven historically off of rates and central bank policy. Certainly the Greenspan era onwards, more so than ever. And there's a huge correlation between interest rates because of the effect that they have on liquidity and the markets. And we saw in 2022, largely going into 2022, as we saw the rise of rates, and perhaps we'll use the euro dollars as an example for this in regards to it's more timely, the markets moved with it than perhaps, you know, you can see rates only went up here, but the euro dollars has been pricing in rates for a while. Markets generally front ran this, and as we saw markets start to price in hikes from the Fed, they sold off to the downside. And I want to look now, which is the 30-day federal funds futures, so on and so forth. I want to look now, and if anybody that's a candlestick analyzer, I know the 3-month is a big candle, but you can see you've got momentum waning here. Markets now are in a situation where rates have gone or stopped going up for the first time in a long time. This is referred to as a pause. They're now looking to call it a skip, which kind of suggests that they may do another hike. And I think some of the Fed's full guidance was they were most members saw it appropriate. I don't think they will. That's just my own personal take. We didn't think they would on this one. Although I think there's like a 72% chance the Fed watch thinks that they're actually going to do another 2.5. And that I think is July. I think that's next month. It doesn't make sense to me that they've skipped for 1 month. You know, we've looked at inflation. We think inflation's coming down. You're seeing real deflation in lots of areas. You're seeing a weakening labor market, although not with the actual non-farms, but in other metrics like unemployment and stuff. We don't think the Fed's going to continue to raise. But really what I want to do is look at what happens in this kind of an environment. Before we get technically into what could suggest that we see new all-time highs, what happens in this kind of an environment of a pausing of rates? So after an aggressive tightening cycle, a pausing of rates typically actually has very bullish connotations for the market. And you can see here, from the point of pause, it took 406 days and the stock market went up a whopping 38%, the S&P. Then it went into a crash, which of course was the 19 event. I think this is essentially the playbook that you're looking at now. We're already embarked on this journey to the upside. I really do. And this is just looking at the kind of backstory of rates stopping going up and what the market does. And this is actually in line, believe it or not, with David Hunter and what he's saying in regards to this melt up for the stock market. You know, his kind of reasoning is that ultimately it's coming by about Q4. He thinks there's going to be a lot of managers and positions that now have to switch, and there's going to be this kind of FOMO that ensues. I can see it. Whether it gets to his targets or not, I don't know. I don't have those targets. I think potentially it could fall short. But just because we have shorter targets, that does not mean that it doesn't overperform. Again, this is a bit of a pariah going into the dot-com boom. You can see tightening into a pause. Could you call this entire period here them kind of pausing? You know, you can see under this kind of aggressive tightening stop, market did very well under this context. Potentially you could. But you can see, again, pause, market rallies into a deeper correction that comes later. We think there is a shitstorm is coming, and this is where we fundamentally disagree with the bears. They think it's now, we say no, it's not. The only market that's seen some kind of capitulation is altcoins. And if you're more broadly, more of a broad trader, you'll know that altcoins are exceptionally small in terms of market size. And all of the markets have, I think, painted a rather different story. So under the context of sideways rates, we think a similar thing is going to play out to what we have previously seen under these kind of conditions. Pivot potentially is bearish because ultimately we know pivots typically occur for some not so great reason. When we look at the S&P, so where rates are at very much suggests, with them going sideways, that markets actually may do well under those circumstances. Technically as well, we also have an inverse head and shoulders that does point to a $5,000 dollar target. So we think it's going to do well, bringing rates up again, sideways rates, they're pausing rates if that continues to be the case. And this is almost what markets are front running. You're going to get potentially a new all-time highs off that alone, and actually you have technical structure in it. Now, one stock that we've been overusing, is Microsoft. And this is a stock that we've called beautifully, that actually went on to put in new all-time highs. This is almost a poster child, if you will, not just for the S&P, but for Bitcoin, and for many stocks out there, including the NASDAQ. As you can see, this is just further behind, potentially, than the likes of the S&P. Could you get a deep correction here and then we see continuation? Could. I'm not sure exactly what the time. I don't necessarily think this is probably going to extend past Q4. I think it's going to go into 2024. And you've got the Bitcoin halving and everything. We'll relate it to the crypto space in just a second. But this is far more probable than the markets are not agreeing with the headlines and the bearish sentiment. Looking at the NASDAQ again, he's called for 20,000. You do have this similar structure. I'll just make sure we're on log. And we'll get a target here. It's not new all-time highs, but it's close. Now, just because we've got certain targets, 15K for the NASDAQ, 5K for the S&P, doesn't mean that it can't go above and beyond. It just means that, if these technical patterns hold true, that's where you're heading up to. We've got the macro backdrop of a sideways rate environment, which historically you can go and look for yourself what the markets have done under that. We don't see a lot of people bring that up. So we've got, again, some stocks, new all-time highs. Apple is still holding its new all-time highs. Even things like Meta, this is aggressive in terms of a recovery. It's almost like a V-shaped recovery. Maybe you do something like this. This is honestly what I think is coming. So we've got although the stock market looks pretty good across the board. You've also got gold. I call for a $3,000 gold scenario. We're not actually that close predicting it ourselves, or that far off predicting it ourselves. So this could be, gold is literally at new all-time highs and it rejected here. Third time, it's going to knock on this door and eventually break through it. Anybody that knows about price action will know that if you go into price discovery, and Nvidia is a great example of this, it can get very explosive. And this could be the blow-off that potentially David's talking about. No, I don't necessarily think that. I'm not saying his targets are going to be correct. I don't know if his timeline is, but I think that actually his general sentiment in regards to what the stock market's likely going to do, we align with. And actually, we disagreed with him massively last year. We didn't see it. We didn't see upside. I do think, again, if you're bullish for long enough, eventually you'll be right. But I think there's more to that in regards to what he's predicted. This kind of end of, he's calling it an end of a super cycle. The yield curve perhaps could suggest that you're going to have an event of that magnitude, given just the inversion of it. Yeah, we don't want that on log. This is the most inverted yield curve in a long time, and it's still bloody inverted. The crash typically doesn't occur. Oh, we've got so many different charts on here. That's not what we want. The crash typically doesn't occur until point of uninversion, which would tie into our actually markets do quite well. And if you look at what markets do at a point from a point of inversion, like this, typically there's lots of things adding up here. Again, not just multiple markets pointing in that direction. Also, we've got macro reasons. We're looking at the bond markets here. We're looking at rates. If we then go and take a look at gold, and we go back to gold, which could do quite well, even in the point of a yield curve crisis, certainly if it's a monetary one. We've seen that with the fall of SVB. Actually, gold and Bitcoin did quite well off the back end of it. This could be a bull flag that you're in, that you're actually now broken out of. Some people are calling it a cup and a handle. The interesting thing about what a lot of people are predicting is this would kind of get you to that 3,000 range. If we draw the bull flag, we're going to put this on log. It looks very flaggy to me. If you want to trim the wicks or you want to take the wicks, we'll take them. And we'll, as all technical analyzers do, trim this one out just for our own, I don't even know what the word would be. Just to fit our bias. You know, if we try and predict an upside target for this bull flag, it's bringing you up pretty high. Depending on where you want to take it from. So maybe you could take it from here. I think a $3,000 gold price is not out of the realms of possibility at all. I really don't. You know, this is getting you towards 3,000. So ignore my prior draw. This is really what I'd look for from the bull flag. You could take it from down here and then you're overshooting to 3,000 plus. You never know. But this does actually lead to upside. Where gold is, where it's positioned, you know, I think, again, it walks like a duck, it quacks like a duck. It's a duck. How is this all going to relate if these markets do well to the crypto space? Well, crypto could also do very well off the back end of it. Again, you've got very similar DNA in Bitcoin with the stock market, which is why we've liked to use Microsoft as a kind of poster boy, if you will, for Bitcoin. 30K was always suspected as resistance, 25K as support. We've got a 40K target. Very interesting, actually, if you look at... So we've kind of moved away from what David Hunter's saying. We can see actually quite a bit of merit in what he's saying in regards to the direction he thinks the market's going in. His targets, 6 to 7K for the S&P, not sure. I can see 5K. Could it get to 6 to 7? Absolutely. Generally, we're actually in line with what he's saying here. Which, you know, sometimes you're going to agree with people, sometimes you're not. This is a point where we actually agree with him. Of course, we didn't in 2022. But relating all this to crypto, crypto will bask in this sun. The only market, very frustratingly for me, that we've not quite been literally perfect at calling the bottom on is some of the altcoins that went on and put in a marginally lower low, but are still where they are, or still where they were in January. So you can sort of look at, okay, well, if we think these markets are going to do well, how are the pairs going to do? So how is Bitcoin against the SPY going to do? Well, this is similar structure. This could be an inverse head and shoulders. You know, you could be in for a period of overperformance against the SPY. Maybe. Looks to be making ground against the SPY. It's been in a bear market against the SPY. Gold. Similar thing. So to round things up, we actually find ourselves somewhat agreeing with David Hunter, strangely. Again, sometimes you agree with analyzers, sometimes you don't. Everyone's got their own opinion on the markets. We all look at the same thing, though, however, which I think is why it's so easy to disagree. He's been calling for this for a long time. You know, I don't know. In regards to, in 2022, we really didn't agree. We avoided most of the downside in 2022 and got back in at the start of the year, and really can see quite a bit of merit actually with what he's saying in regards to this melt up that's to come. I can see it, and we've looked at a few reasons why that could be. Let me know your thoughts and comments in the comment section. If you're not already subscribed to the channel, please do so. We will bring you good, genuine, honest content on a daily basis, not just about the crypto space, but markets further afield, as somebody like myself who is very interested in markets and technical analysis. And yeah, have a triumphant Tuesday, guys. Let me know your thoughts in the comment section. Am I just talking a load of nonsense? You know, I think one reason that people are so bearish is because of this shitstorm that we know is coming. They think it's here, right? This is it. This is going to happen. And the problem with that is it's kind of how short squeezes occur. If it doesn't happen for a while, people start to go, you know, and then, oh, well, maybe the market starts to, what it's already done is suggest otherwise, and then people have to kind of get on that bandwagon. Fundamentally, this isn't a disrespect to the bears right now. The only thing that we really disagree on, for the most part, is a technical analysis they're doing that suggests downside. I've not seen particularly a great technical view on really any market, stock market, Bitcoin, that suggests downside. And also, we fundamentally disagree on when we actually think the crash is going to occur. And actually, you're likely going to do well into a crash, and the crash is going to probably occur when most people aren't expecting it. You know, are you Michael Burry or are you the banks right now? Michael Burry was short when everyone was long because they just couldn't simply see it. You know, right now, I think most people are short and worried from an investment point of view, and they're on the sidelines. But ultimately, this is the perfect kind of routes for money to come back in. And there is the question, where does the money come from? Well, there's a number of answers to this. Look at what the Treasury are potentially doing. Look at market funds. There are still reasons to be bearish right now in terms of the macro. Also, the Treasury, what they're doing in regards to the yields and the bond market. But generally, you know, this is the path that we're on. And we've given you a few reasons, a few things to think about to how this could actually play out and what this could mean for crypto and the broader markets. And there's opportunity in this. You know, is AI the narrative that sees? There'll always be a narrative that accompanies the technicals. And I'm just rambling on now. So I'm going to love and leave you. If you enjoyed the content, like is appreciated. So as a comment. Catch you all in the next one, guys. Thanks for watching.